Okay, welcome everyone to the Sunday review. Today is Sunday, December. Actually, what's the hold on. This is this is this week's calendar, right? Okay. Sunday, December 17th. Okay, so this week you can see from the calendar here we've got some red news. We are actually nearing the end of the year, right? So everyone is aware that at the end of the year, the trading and the activity, the volume and everything is kind of is slow. It's lower. There's lots of ranging conditions, right? And basically, it's not really that ideal for trading. But if you do trade, just keep that in mind. And of course, there's going to be probably a little bit more waiting around for things to happen. But luckily, we've had some volatility in the markets, and news has been driving price around. And we've had some big moves, so there hasn't been a lack of setups. But as you end, as we close out the year, and as we go towards the new year in 2024, just expect price to kind of peter out a little bit more, right? So taking a look at the calendar this week, we can see that we have red news starts around Wednesday, right? So we've got CPI for GBP on Wednesday. We've got CB consumer confidence on Wednesday as well. On Thursday, we have final GDP. We have USD unemployment claims. And then Friday, we have GBP retail sales, core PCE price index, and then the revised UOM consumer sentiment, right? So we've had all our big news. Last week we had a whole week of red news, and all of the big news that we had was, like FOMC, interest rates for GBP and Euro USD, and a couple of the PMI news folders, right? So we had a big news week last week and lots of big moves. So we'll take a look at those in a second on the chart. And just this week is probably just going to be your normal run-of-the-mill kind of red news folders, right? Doesn't mean you shouldn't pay attention or not pay attention to them, but it probably means that it's not going to be as significant as the news we saw last week, right? So let's get into the charts. Let's go over to the dollar index here. Let's switch over to my TradingView chart. All right, hopefully you guys can see that in 3, 2, 1. There we go. Right, and this is the DXY chart. We're looking at the daily, all right? And so last week, with all the news, you can see the movement that we had on DXY. So there's a big move down. We saw a break of the structure below here and swing low, and we were moving towards the deeper points of interest down here. We were looking particularly at the equal lows down here, and then also at the wick. And this level here is close to the 100 level. So coming back towards that 100 level. The level here is going to be our immediate target this week. I think this will be the draw, first draw that you can look for. And this is going to be right around, let's take the low. 101.74, and so just beyond that, we can make it a nice round number, right? You can look for 101.50, right? That could be a weekly target we can draw to. If we open the week, with a bearish move down, let's take a look at the 4-hour chart here, because we did end up on a high note here, or we did a retracement last week. So you can see here, after we took out the structure over here, right, we had a pullback, right? And that's normal. Of course, when we have a break of structure, we expect price to pull back, making a swing low and pulling back. So I had marked a couple of areas here to look for. This is going to be the first area I'm looking for a reaction for price to make a lower high and then continue lower, right? Of course, we can look at the whole range, which is this high to this low, right? And I would be expecting price to come back anywhere in this region here. We can see it. There's a very nice imbalance here that we can look for in the premium area for a reaction, and price could come back and draw to that. I'm looking at this area here because obviously we did break structure here, right? And we do see a little order block right here that did cause the move down to break that structure. So there's generally going to be high likelihood for a reaction at that point as well. So as price trades up into this area, look for a reaction. If it trades through, right, then we can look for a reaction a little bit higher up in the area, somewhere up here. Okay, so as it's moving back up, so we have generally initially we're going to have a bullish bias when we open the week, all right, or we'll be looking for price to go up. So on the 15-minute, if we look at structure and how it has played out on Friday, we can see that we made a low on Thursday, right? But we didn't continue on Friday. So Friday, we saw price actually make a higher low, okay? And we didn't continue the daily low from Thursday. And we also gapped higher, okay? So I want you to pay attention to this little area right here. Okay, so we had a gap opening the market on Friday. Okay, price cut through the gap, and we traded down through it. Okay, but we did not actually continue on and follow through. So normally, what we'd expect for price to do when we cut through a gap is for this to become an area of resistance, right? So for price to come back up into like this area right here, we'd expect this to hold and then continue lower. But in this case, it didn't actually do that, right? Instead, we saw price make a higher low. So we saw a higher low here, then price came back down, made another higher low here, and then we saw price go up. And we did this with some force, right? This was the London Open. So we did a couple things here. Number one, we came back through the gap opening. We gave ourselves a change of character, right? A bullish change of character by taking out this internal high over here, which was the cause of the swing low down here, right? So this actually shifts the entire focus to bullish, right? And then you can see the subsequent follow through in the New York session with this big up move here, right? And the big surge in price. So continuing the order flow right now and continuing the structure, we should see price continue to move higher, right? And that's how we're leaving off at our bullish bias. So H4 and N15 aligns together. We should be looking to target this high at the open. Okay, and that's our 4-hour point of interest as well. Right, and that's just right around 102.80. So we can look for the 103 big figure as a round number target, and we look for price to continue in the uptrend. So Asian session, we start this, the week, we open the week, we have an Asian session consolidation. Ideally, we'd love to see something like where it consolidates in Asia, creating liquidity, and also creating equal highs. Right, and so there's a liquidity pool here that price will want to draw to, and then maybe London will give us a stop on low and a rise, right? And we're able to break a structure and then continuation up. Okay, something like that. And using this as like the OB. This is just an arbitrary kind of projection, but this is what I'd like to see, right? So we get a little stop hunt in Asia, in the London Open, right? A stop hunt low rise. It breaks structure, gives us a change of character, and then we see price continue with the structure and the move upwards to 103, right? And this is ideally what I'd like to see at the market open for the dollar. So let's see if that plays out. Okay, moving on to euro. So what this means for the euro dollar, obviously, is that going to be looking for a move down, right? And so we can see here from the daily chart that we have already, we ended the week with a big move down, right? You can see this big kind of massive candle to the downside. We've got this nice little imbalance right here on the daily, right? So daily imbalance, the area that will look to get filled or at least partially filled. So this will be the draw on euro at the start of the week, right? To draw down into this imbalance area here, we can look for it to come down. At the start of the imbalance will be around 108.60, so let's call it 108.50. We get to the middle portion of it, right? And then we can look to fill it completely and then maybe draw down to 108 big figure, okay? Now I do expect this to continue higher, okay, because we are in a bullish uptrend, okay? And this potentially is our higher low. Whoops. Okay, this potentially is our higher low to then, continue up and make the higher high to break this. Okay, but we're in a retracement right now, so I'm not expecting it to do that just yet. So I want to see price maybe come back in to retest an area down here, and just so happens that we have this nice little imbalance here, right? So it could go lower as well. We could actually come down to, maybe the order block down here, but this is generally the area I'll be looking for a reaction to first, right? So if we drop down to the 4 and we take a look at the 4-hour structure, get rid of that for now. So take a look at, the structure that we have here and how we ended up the week on Friday after all the news. So when we make the load here, the subsequent follow through here with the big surge in price that gives us this break of structure over here sets in motion, the uptrend, right? So it made an attempt to run the high. Okay, so we have basically price reacting to the high up here that gave us this pullback. But so what I'm actually looking for now is the higher low, right? So I want to see price come down possibly to, it may not come all the way down here, but if it does, great. Where we broke structure, okay, and then also you can see that there's this large imbalance here, right? So we can look to draw down into that area, right? And that's where that daily imbalance is as well. And then creating the next kind of higher low here to then go higher, right? And then eventually up and through the H4 structure, right? And the daily structure. So this is, it has to move down first, or at least, at the open of the week, I'm expecting it to move down first into this area, right? And then we'll see what happens from there. If this plays out, great. If it continues to run through and eventually if it breaks the structure, then we can look to follow the downtrend and be bearish, right? So following that, let's go to the 15. All right, so what that means for the 15-minute is, as you can see, we're already bearish on the 15, right? So we're already doing a bearish retracement. Friday started or initiated that, right, after we failed to break higher from Thursday's high, right? You can see we came up just right up to it here and failed to break, and then we saw price go down here from London. There's a big shift down London with the PMI news, gave us the change of character, right? And then price came back to retest the area, and then another shift down. And then this is where we kind of ended up. So looking for price to now break this low and the low of the structure. Okay, it looks to be pretty close to where it is right now already, so it's not too far away. Should hit that level pretty quickly. And then after that, drawing down into the imbalance area, right? And then that's the 4-hour point of interest that we're looking for. So, the open of the market, okay, same thing, just like what what I just outlined here in the dollar, but kind of opposite, right? So we'll look for Asia session to give us a range. Would be fantastic if we were to stay above, the low here in Asia, and it gives us equal lows. And then we see maybe a stop on high and then a drop, right? And then we get a break, an internal shift and a break of structure, right? Or a change of character rather, and then the retracement back up and then the continuation down, okay? And so that'll be, the idea for the open and the start of the week. Okay, and then we can kind of play it by ear after that. And that's Euro. Okay, let's go over to GU next. All right, so on GU, we have price breaking the high here. The last thing that we did on Friday here was that we broke the structure and then we pulled back, right? So it's kind of similar to what we saw on EU. Difference is that EU, we actually didn't see price break the high, but at GU we do, right? And we see price actually go through it, right? So that gives us a little bit more, kind of strength behind the move, and that it is going to continue bullish, or I expect it to continue bullish. So we're in the pullback phase, right? So what I'm expecting it to do is to come back to the low here, retest the low, but not break the low, make a higher low, and then continue higher. And just like EU, we also have an imbalance here, right, to draw to, so we can look for it to come down further and fill the level. And then we also have the daily OB as well. So let me just mark that. We'll shift this over. Okay, so we can look for price to come back down into this region here to make that higher low. So we can start looking for the 126 big figure and retesting that zone. And then after that, moving upwards after that. So let's go to the 4 and we'll look at the structure on the 4. All right, so as you can see, our last break of the structure over here, right, creating the swing high and then the pullback. So keep in mind that we're bullish, right? And the structure is bullish and we're still making higher highs and higher lows. So until this low gets broken to the downside, we're going to be expecting price to be bullish, right? So in order to be bullish, though, it's going to have to retrace down to make the next higher low, and we don't know where that's going to be, right? So we're just assuming it's going to be somewhere in this vicinity. So just like EU, we're looking for price to come down here, react to, maybe the OB here or somewhere in this imbalance, a point of interest, which will give us a reaction, a swing low, and then the move up and through. Okay, so this area here I've marked is the extreme and obviously the ideal point of interest that I'd like to see price react to if it does get all the way down there. But it could react anywhere inside of the 4-hour imbalance here, right, and give me this. So watch this area as price moves down into it. I like to see the market open and then price drop down into this area and then look for the reaction after that. So 15-minute reaction there, and then the potential setup area. Okay, so again, just like EU, we can see that we failed to break structure on Thursday's high. We failed to break that on Friday. And then from there, subsequently after the PMI news, we see the drop in the shift, right? Which gives us the change of character and then the continuation down after that, right? So we'll be looking for price to come down. We've got some nice equal lows here, right? For target. And then we've got the big imbalance. So the draw is down here and we'll be looking for price to come down to the 126 area again to retest that area. Okay, so I'd like to see again, this is great here. It's kind of lower than the EU structure, but again, I'd like to see price open, market open, right? And we get a Asia consolidation. Okay, we'll form some liquidity here. Then we'll get a nice stop on high and then a drop, change of character, structure break, and then a move down into the zone, right? That would be ideally the best play and the open the market if we can. Right, and then from there, like I said, just if it does continue through this low, then we'll be bearish and we'll look for the continuation lower. But if it does hold here, which is what I'm expecting it to do, we'll get a higher low to form, and then we'll start to see price revert back up. Okay, so that's kind of the idea for the week on GU, and then for gold. So if you guys have been, following the last few Sunday lives I've been doing, right, kind of been predicting the moves here for gold for the end of the year and in the first quarter, right? And so far it's done the expectations, that I've laid out. It's just done it a little bit earlier than I thought. I was actually expecting this to be, later in the year, or I mean later as in like now to first quarter, right? So January, February, March, making a move like this, but it's already done the move, right? So now we've got retracement, okay, and obviously the retracement has ended, okay, and now we've got the move back up. So what I'm expecting now for price to do is, because this was such a large kind of rejection, okay, I'm going to be expecting the move down afterwards, right? But there's going to be a little rally, a little bullish rally here first, okay, and so usually, the seasonal tendency for gold is that it will rally in the first quarter of the year. So January, February, March usually is a bullish kind of move for gold. And so you can see that there's a start of it, it's basically, it's kicking off here for us, with this swing low. So what we've done is we've made the high, we've made the higher low, and now I don't know if it's going to go higher. It could, it certainly could, but at the very least, I should see it come back and kind of retest the area in here, right? So maybe the wick or the top of the where the wick starts, okay? But I'd like to see it move a little bit higher into this region here. Maybe give us a lower higher failure swing, and then maybe move down after that. Okay, but this bullish move here, right, or this continuation here over the next, month, 2 months, moving up towards this region here, if it does do that, that would be what I'd like to see. All right, so as of right now, you can see that we have a very nice looking swing low, right? A very strong push with an imbalance, and then also a bullish change of character. So I've got the OB marked here, and I've got the imbalance here that we can draw back into. What I'd like to see happen right now is for price to come back into this area here, make us a higher low, and then continue up from here. Okay, and then trade into this region here, which then gives us a reaction down after that. Okay, so same with EU and GU, right? At the start of the week, we're looking for a initial move down into the daily imbalance, into the daily discount and the swing low, and then looking for the higher low and then the formation to move up. So there's the 4-hour, that. Right? So on the 4-hour structure here, we can see there's that nice big shift, right? The big imbalance and the big push, which traded up into this area. If you were there last week, we kind of actually marked this out for the equal highs, right? And then the point of interest here for the reaction, right? Which played out pretty nicely actually. So we got the reaction. It made the lower high here, right, in the failure swing, and then we saw price come down, give us a change of character, and now trading back into here. So far it's going to plan as far as the higher time frame is concerned. So this is the next step, right? So we've got the M structure, move down here into this discount, right? And then we'll see if we can get a reaction in this area for the higher low. And then we'd like to see it continue up from there, right? And then make a run for this area over here. Okay, so that is the start of the week. So the start of the week means that we should be looking at a bearish down move. And so on the 15-minute, let's take a look, because we can already see that the 15 has started the downtrend. Right, so there's our high that we made on Thursday. Friday, just like the others, right, unable to get above, right? So we formed a lower high here, and then when the PMI news came out on the US session, then we had the shift, right? And then we had the change of character after the shift, retest of the shift, and then the continuation at the end of the session. So basically following the order flow here, looking for price to then we'll form a swing low here, and then come back up, and then make the next move down like this, right, down into this zone over here. So where can we expect price to make the next higher low? Somewhere in here, right? And if we look at a number to look at, it would be 2000. That'll be a big figure number, right where we broke structure last time to give us this big move up here, and then where that peak formation was, right? So we'll look for price to come back and retest the 2000 area, right? And then if you can get down below somewhere in here to fill the rest of this imbalance, and then retest or mitigate this consolidation, right? Then we can assess if it does continue down through the level and break the entire structure, then we'll be bearish, right? We'll look for a deeper retracement, but otherwise we should look for a higher low here to continue moving higher. Okay, so that is gold. And then lastly, we're looking at NASDAQ here. All right, so NASDAQ on the daily, as you can see, is still extremely bullish, right? The last break of structure over here, gave us just a tiny pullback here, right? Didn't even come down anywhere near, these zones here for a deeper retracement. And then we saw just a little stop hunt here below the low into the imbalance, and then we saw a price move up, right? And so this right now, the continuation or the momentum right now, the bullish momentum should carry through into the next week, or at least I'm expecting it to, right? And we can see that the 17K number here, the big figure, is right there, right? So I'm retargeting that first, right, as the initial target for the week, and then seeing what happens with price after that, right? Because that is territory. This is basically all-time highs. If we get above here, this is the last high that we made, the high of the year. It was 16,771, right? Or 16, so is it 16,7? Yeah, 16,771.6. All right, so trading to the 17K will make it all-time highs, right? And then usually when we get to all-time high levels, it goes much farther beyond that. So there might even be a big surge in price above that level, just like what we saw with gold over here. Okay, initially, the high was right here, right? It was at 20 or 2080, and then when we get above the level there, we can see price moves an extra, like 1,000 pips above that level, right? It's kind of exaggerated here on gold, but it certainly could do that here for Nasdaq as well. It certainly has, the volume and the volatility to do that. But I just don't know, when that's going to happen. It could be this week, and if it does, it's the end of the year, so the markets tend not to move as much at the end of the year, but you never know, especially with kind of these big key levels like this. It certainly could move much further than our expectations. So I will be looking for a continuation into that area, or continuation long. You can see that there's no significant pullback or anything really that suggests that we are bearish at the moment. Now it could form a swing high just below the level, right? And so sometimes what we do is, before we get to a significant level, breaking that level, it'll form like a swing high just underneath it, right? And maybe it'll make even an M structure and it'll pull back. But we should be looking to pull back to make some sort of higher low to then continue up through that level later on, right? So if it does do that, that's also a possibility. We can, obviously cross that bridge when we get there. But initially, right now, I'm just looking for price to go through the level. So if we go to the 4-hour chart, okay, you can see that on the 4-hour, even if we go down to lower time frames, each of the iterations of structure, you can see that it's just making higher highs and higher lows, and the pullbacks are very shallow. They're not very deep, and price just continually is moving higher. So the order flow is definitely bullish, right? And we're going to continue to follow that all the way up. You can see last retracement we had here. This was the deepest one we had on these pullbacks, right? And it came back into the OB here after filling the balance. And then we saw the reaction. Okay, this wasn't too strong up here. Okay, so taking out the high wasn't very convincing. So there's a good possibility here, like I said, once we get, just before the highs, right? So the 17K is right here. So just before we get to that level, we might see price, create some sort of swing high structure and then pull back, right? And if it does that, then just let that, gear up for the next move up through the level, because that should be the retracement to make, the next structural low to then trade through that level, right? So right here, we just kind of be wary of what's happening. So we've got a pullback, and then we have price, kind of moving through, but not very forcefully moving through. So what I'd like to see at the start of the open of the week is for price to take out that level with a definitive kind of candle close. All right. So on the 4-hour right now, you can see it's just barely above it, and it's with a wick, right? So that's not really a strong, convincing close. If we go to the 15, right? Because sometimes if we see a wick on a higher time frame, it might be a body close in a lower time frame. But even on the 15, as you can see, it's just barely taking it out with this here with a wick. All right. Now the good news is that the reaction did not make a lower low. Okay, so if I pull up the 15-minute markups here, all right, what we can see is that this is our structure high and low, or the last 15-minute structural high or low right here. And prices pulled back into the discount, right? And so for bullish, that's what we expect price to do, right? We expect price to come back into, the discount area below the 50%, react to a point of interest down here. In this case, it just happens to be the mitigation of the high here, right? And then the reaction from the imbalance that gave us this nice little pop, right, to the upside, which then continues to break the internal structure here, right, which gives us a change of character, which then goes on to take out the high, albeit with a wick, right, but it does go above and take out the high, which then gives us this reaction, All right, now this reaction doesn't break this low. So if you follow along with me here, right, making higher highs, higher lows, like even these little small internal structural pullbacks here, making higher highs and higher lows. Okay, right, so this next move here, still making higher highs and higher lows until right here. Okay, and this is kind of where we end the week. So right here is, kind of where it tells us whether or not we should be looking for bearish or bullish moves, because if we continue down now through this level here, that's going to be a change of character, right? It's going to be a shift in the direction, at least on the 15-minute. And then we could look for maybe price to come back down deeper from here, right? And that's where I'll be expecting to see that, that small kind of swing high structure before the move up through 17K. But if we don't see price break this structure here, okay, then very likely we'll just see price continue to go up and through from there, right? And then we won't expect another pullback or retracement before it does that. We should see price just go for it. So, a couple of scenarios we can watch for as the market opens, okay? But what has, kind of consolidated here, right? Hasn't broken structure lower. So technically we're still kind of bullish here, and we could still see price break the high, right? With a candle close. We've already seen it break it with a wick, right? But if it doesn't break it with a candle, it's not really considered a break of structure. It just looks like a liquidity grab, and price could reject and and go lower from there. So it's very important to see the level here taken out, definitively taken out, before we expect it to just continue to move higher. Otherwise, we could look for a potential short-term rejection or retracement back into the range again, right? And just keep in mind that we're at levels, we're at like all-time high levels. Okay, so I'm expecting it to run it, but it could do a whole bunch of stuff before it decides to run it. And it being the time of year that it is, there's a lot of manipulation and a lot of back and forth and a lot of ranging markets, like I said. So just keep an eye out for that. All right. All right, so that is the rundown for the pairs that we look at here. All right, does anyone have any questions for me? No, I asked that. I should probably ask that at the beginning of the session if anyone has any questions. And it could be any questions, particularly not just what I've covered here today, but like if you think about, what it is that you guys are struggling with, or what it is you guys have, what it is that when you trade you have, difficulty with, questions like that, I can also help to answer. If you feel like I'm putting you on the spot, then obviously you don't have to answer, but I'm happy to answer any questions that you guys have, right? All right, so Nina Chalk trying to understand the change of character. All right, so yeah, we can go over that. That's probably a good thing to clarify for everyone at first, right? So when we talk about change of character, we're talking about a internal break of structure, okay, which gives us like the first real sign that price is turning around, or when the change of trend is about to occur, right? So it's not a guarantee, of course, but it's just a good confirmation that price is about to turn around and go the other way. So when we have a structure, right, we're always going to have like a major structure range. So your major high and major low are basically the top and bottom of the range that you're working with, right? So in this case here, I'm just looking at this chart as an example. This is my high and this is my low. We can see that that's clearly like our defined structure in this case, right? And so when we make a swing high and we start to pull back, right, we can see price making lower lows and lower highs. And now we can see it's clearly making that descent, right? And then when it starts to make some big moves, then of course you have, the pullback. So if we look at this, right, so it's bullish here, higher high, higher low, higher high, right there, right? And at this point, it starts to become bearish, right? And so when it becomes bearish, it stops making higher highs, right? So if it was bullish, we would expect it to make a higher high here, but it doesn't. Instead, it makes a lower high and then a lower low, right? And so now you can see it's on its bearish descent. Okay, so at the moment that it makes the lower low here, right? If we continued in this bearish downtrend, what we'd expect is for it to make the lower high here and then the lower low, right? And that would be the bearish downtrend, the continuation. But instead, right, the last kind of lower high over here was broken. You know, this kind of took a while, but we broke it up here, right? So what we did instead was we didn't make the lower low, but instead we made a higher high. And when we're in a downtrend, right, what we don't want to see is the lower high here broken to the upside, because that basically tells us that the trend is changing. But why this is a change of character is because this is the internal swing high, right? You didn't break this high, okay? That would be a break of structure, not a change of character. So when we deal with change of character, we're talking about the internal ranges, right? That change that tells us that price is going to be potentially bullish now, right? So here you can see is when we broke this level, right? And this is kind of more an exaggerated example of this, but when we broke this level here, you can see that price now is making higher highs and higher lows, right? So in this case here, like I said, it's still bullish because we haven't broken this low and we're still kind of in this range, but ultimately we'd expect price to make a higher high here, right? Because we have this change of character. This tells us that we're bullish in this scenario, okay, until we're shown otherwise. What happens, to give us the invalidation, or what tells us that we're bearish again is when we get this low here broken to the downside. Because, oops, because if this low gets broken, right, we're in a bullish uptrend here. And in a bullish uptrend, you don't want to see the lows, the higher lows get broken to the downside, right? So if this comes down here, right here, and this becomes like this, right? Now we've got a change of character to the downside. Now we're potentially bearish, and then we'd expect price to make a lower high here and then continue down like this, right? Hopefully that makes sense. If it doesn't, let me know, and I can try to give you another example. Um, do I only trade the pairs listed on my chart? Yes, for the purposes of the group, my membership group and my VIP group, this is what I cover every week. And these are the pairs that I trade. If you guys trade other pairs, I'm happy to, go over the pairs, that you guys trade. If you guys want to, tell me, you'll take a look at, GJ or take a look at some other pair. I'm happy to do that. But these are the pairs I focus on for the group. So, and this was came about by just polling the group and seeing the most common pairs that everyone trades, and then these are the ones that that are most commonly traded. So, I mean, other people trade other pairs in the group as well, but just not as much. So I try to just focus on the pairs that benefit the most people in the group. Right. How about GBP JPY? Sure. Let's take a look at that. Right. I'm probably have to do a quick kind of rundown. And if my chart is not slow, all right, so let's take a look at GBP, JPY. I have some markings on here from before, I guess. All right, so we're just going to approach this from a top-down perspective, right? And we'll go look at our daily chart. Okay, and so the first thing I like to do is I always look for my ranges, right? And when most recent break of structure, and I'm trying to determine my direction, right? So for the daily chart, you can see here we have our swing high, right? And our swing low looks to be, I guess we can look at this one right here, okay? And then the last break of structure was this swing high over here. All right, so we got a BMS. we got our swing low, and we've got our swing high. Okay, so at the moment, right, we can see that the structure was bullish, or it is bullish rather. It still continues to be bullish. Higher highs, higher lows, higher high, and then we're at this higher low juncture right here. Okay, so potentially right now, this is a good area for a buy. All right, on the daily chart here at the moment here, we could be looking at potentially a buy or a swing low here forming for a buy back up. Okay, now we don't see any real confirmation of that yet, and certainly we're in a downtrend. Or this immediate section right here, you can see we're in a big downtrend. So price could certainly continue to move lower, right, and look to take out this level. So um, at the moment, right, this could be a draw or a level you're looking for price to come down to, right, or trade down to. Okay, so if it does make a swing low down here, right, and it does, hold the level, then this will be where we make the next higher low, or we expect the next higher low to make the next higher high because we're in a bullish uptrend. But for the purposes of the immediate candles, okay, we're bearish right now, right? We're moving down towards this low, so it's a very real possibility that we could also run the level, which is at, let's see what that low is at. 178, big figure. Okay, so that's a pretty nice, big, even number. Okay, now if we go down to the 4 hour, all right, we can see what's happening on the 4 hour and see if there's any, kind of inkling of a reversal. So if I look at the 4 hour structure, right, I'm going to do the same exact thing. Okay, so I'm going to take my ranges. Okay, now I'm going to say, where's my last break of structure? Where's my, my high and my low? And what is the bias right now? Or what's the trend? So I've got this high, this low. Okay, the last break of structure was the break of this low. So we're bearish, right, on the 4 hour. Right, so here's my 4 hour BMS. Okay, and we can see that price has continued in the trend. Right, the low here, the high there, and the low here. Okay, now paying attention to the lows at this point here, you can see that there is not a break of structure. This is a wick break, right? And so I don't count those as a true break of structure. So this is more so like a stop hunt below the level, right? And then you can see the subsequent reaction after price does that, okay, is this big move up. Now we've made the next kind of higher low, or sorry, lower high rather, right? And so because we've been predominantly bearish, right, I would expect price to move down from here through this low, right? And also through that daily low, which is the 178, right? So this is kind of the move, or at least at the start of the week or the open of the week for GJ, okay, I would expect price to move down towards this level, okay? So you can look for a bearish start to the week. If we drop down to the 15, right? We can do the same thing with the 15. Now on the 15, we can see that we have our structural low is here, our high is there, okay? And so far, we're still just inside of the last big range right here, okay? So what's happening on this time frame is that we were bullish, okay? We made this high, and now we are bearish, okay? Now we're tracing back down to this level here. Now, the higher time frame bias, like I said, is bearish, right? So I would be expecting price to continue to move down into the discount area here, okay? Or potentially running out the low itself, okay, at 178 down here. So this is the direction for the week, for the start of the week, right? You have a very clear downward direction, looking for price to react to maybe down to this consolidation here, right? Maybe taking some of the internal lows or taking out the low of the structure itself altogether. Okay, so what I would expect for the start of the week is we'll get some sort of consolidation, right? Like this. We'll get a stop on high, and then we'll get a drop, and then a continuation down, right? Whether it stops here or here, but somewhere in this region, right? That's the setup I would look for GJ. Make sense? Okay.
Hey Jeff, I have a question for you.
Sure.
Okay, we have the break of structure, the stop hunt, sweep liquidity sweeps,
Hmm.
uh, with the wicks,
Right.
and but what do you look how do you look at the or how should I look at uh the even the wicks say well say let's go back to what you were saying about NASDAQ 17,000.
Hmm.
We have two highs right at 17,000, not 17,001 or
These
16
two.
or 16,000, 999 or it but both at 17 even.
Hmm.
What do you look at then? I mean, how do
If
what do you
they're
look for
if they're
there?
right if they're right even, right, and the higher time frame is still bullish, I would still look for it to continue higher after that. Right. So my goal is not to look for or try to catch the reversal. I'm just looking for following the order flow that's currently present in the chart, and I'm looking to take the next liquidity pool that it should reach for. So if the higher time frame is still bullish, like in this case here, it's still bullish, right? We can see on the daily chart and on the forward chart, we're still very, very bullish. Like there's no pullback or anything that tells us that I should be bearish or looking at bearishness yet. Okay, and that's the key word is yet. So when we have confirmation that it is turning around and that it's actually giving me like a 4 hour change of character or a shift, right? When we see these kind of big shifts in price that's bearish, then I can start looking to follow the bearish order flow and then look for shorts after that. But if I don't see that on the higher time frame, then all of this kind of like movement here on the lower time frames are just pullbacks, right, to make the next higher low, right, in this case here, to then continue higher, which is what the expectation is because the higher time frame is still bullish. So even though I have two like equal highs sitting right here above, let's say this is the 17K number, doesn't matter, right? I'm still looking for this to be bullish. It could go to 17.5, it could go to 18K, it could go to 19K, right? But as long as the order flow and the structure tells me that's going this direction on the higher time frame, then that's what I'm aiming for, right? I'm not too worried about what's happening on the lower time frames unless it's following in line to what's happening in the higher time frame. So you want to think of like the intraday time frames, like the 15-minute and these lower time frames. How does it fit into the puzzle of the higher time frame? And what does it have to do here in the 15-minute to make the 4 hour or the daily true? Right? So if the 4 hour is bullish and the daily is bullish, right? But the 15-minute shows you that it's bearish, like it's moving down, and you see the 15-minute is bearish. What does that mean on the 15-minute? It means that the 15-minute is moving down to a 4 hour discount level or an area where it should make a higher low on the 4 hour to then continue price up through to the next liquidity pool, whatever it is, right? 17K, 18K, whatever it is, right? Or equal highs or daily high or weekly high, right? You're just gonna have a target that you're gonna be reaching for that's in line with the higher time frame direction. Does that answer your question, or is that too
It,
vague?
yeah, um, yeah, but on the BMS and the sweeps.
Mhm.
You're usually going to get a pullback on both of them, right?
Yeah,
And I believe I asked you this once before, where on the sweeps, uh, the pullback is usually a little deeper than on the BMS usually.
right.
And okay, now again, back on that even number on the double top, what kind should we also at that point, will it look for a pullback
Yeah,
or not?
okay, if you have a BMS versus a sweep. So a BMS means that you're closing with a candle, right? So let's say that this instead of this was if this wasn't a wick close and this was a BMS, which is a candle close, right? We would expect to pull back either way. Both scenarios would expect price to pull back, making a swing high and then making some sort of higher low and then continuation up. In the case of a sweep where it's a wick, right, where it takes the liquidity above the high and it acts like a stop hunt. because it didn't go through and break the structure, okay, what that means is that it's taken liquidity above this level. So where should it go to next? It's going to draw to some kind of liquidity below, right? It didn't take. So in this case here, this is what I'm saying. Like if this gets rated, okay, then all we're doing is we're trading back into like the 4 hour discount level, right? And we're coming back into the 4 hour, below the 50% in the 4 hour range of the POI in the 4 hour to then make the higher low to then go higher. All right. So the play is that it'll sweep the liquidity above the high with a wick, and then it'll go deeper into the 4 hour point of interest rather than seeing the break of structure, right? If it's a break of structure, then we might not see it go down into this level here. We might just see it continue to follow the order flow and pop, higher highs and higher lows and continue the internal trend, right? The difference is because we didn't take the liquidity above, or we didn't break structure, and this was just a tiny sweep. So if it does that, why would it do that? Like, why would it just go up above this high and then come back, right? It's because it's gonna go down for some of the liquidity, right, to move to fuel the move, the next move, right? Whether that's to move higher or lower is, but if the higher time frame order flow is bullish, then you're gonna expect it to go higher, right? So if it's going to go higher, then it needs to get liquidity down here somewhere to fuel the move to go higher, the next move higher. Right. And so because we just took this liquidity, the next logical thing for it to do would be to come down, take liquidity into a 4 hour point of interest or 4 hour, wherever area you've marked, and then look for a move up after that. And how do you find that move? The confirmation becomes what we always look for, right? We always look for a liquidity sweep, right? So it'll take some sort of internal low, then we'll see a big shift in price, a big imbalance or a big move up. It'll give us an internal change of character, and then price will come back into that smaller range or that internal range, discount POI, and then we'll see that move up after that.
Okay, thanks, Jeff.
Okay. All right. Let's see if there's another question up here. Paul, hey Paul, you still on here? Yes, you are. Okay. Can you recommend an app to use to help ease the journaling process? My process is more manual. So I'm not sure what you guys use for journaling, but there's lots of, I mean, I think recently there's been like lots more like apps out there and software that you can use. I know Notion is one that, I've mentioned to you guys before. Notion is, and they've gotten like, I think they've made some updates to that as well. It's not just for, it's just note taking in general. So it's not particularly for forex trading, but you can use Notion as a trade journal and it works really well. I think there's a new one out. I forget what it's called. I think it's called like TradeZella or something like that. I think that's what it's called. But anything that you can use to take notes with, right? It doesn't have to be fancy. It doesn't have to be like an app. You could use something like Evernote, right? And that's like an app that's like a note-taking app. You could even just use an Excel sheet, honestly. You could just use an Excel sheet, okay, and put like different columns for the things that you need to note for yourself. So like things like the pair you trade, right? The time of day, the session you trade, the entry model that you're looking for. Okay, like what's the entry model you're looking for? And then you can put the columns for the win loss, right? And then the notes for the reflection of the trade after you've taken the trade. Like those are really the only things you should be looking to journal. Like there's other stuff that is probably more sophisticated, more complicated. Like you can put maybe images of your chart markups into some of the note stuff that I've seen. So that's kind of a little bit more advanced, but I mean, you could just keep screenshots, along with your Excel sheet. That works just as well. As long as you're doing it, that's the most important thing, right? All right. Any other questions? Seeing none. Okay. All right. Well, let's see. Oh, another question here. Hi Jeff, is it better to only trade when all three timeframes align and to wait for that alignment? Of course, that's the best way. That's the most ideal situation is if you get all three timeframes in alignment, right? But of course, that also means that you're going to be waiting a long time sometimes for some of these trades to set up. And so, you might lose patience. That's a lot of times the downfall of traders is that, you just get too impatient waiting for the setups and waiting for things to happen, and it never happens, or it happens and you miss it. And then you get frustrated because you waited all that time for your setup to happen and then you miss it. And then after that, you're like, oh man, now I gotta wait, however long it's gonna take for the next setup. And then you start trading, a not as smart, let's say, right? You make some bad decisions. You start to just enter the market based on, FOMO and because you feel like you're frustrated, you waited so long for a setup and it didn't happen or you missed it. So, but yeah, the best way is when all three of those align. And when you're looking for something, obviously that's going to be the ideal situation because that's going to give you your highest chance of success. I will tell you that the best trades that I take are going to be the ones that where all three align and like where I enter and my TP is going to get hit rather like quickly, right? You're not really going to be waiting for take profit very long. It's just going to happen within the next few candles of that session if all the stars align, right? So yeah, obviously that's going to be the best case, but like I said, it's not always going to happen that way, right? And so you got to be able to be flexible in how you trade. But again, if you understand, like has how I was explaining the higher time frame order flow with the lower time frames, and then understanding how to look for changes of character to see like where you should be trading in those ranges, you could really essentially be trading, both directions if you know how to look at structure, right? So like if I know that price is bullish on the higher time frame, but like I said, an example where this is bearish, okay, on the 15 minute, then I know that I have to wait for the 15 minute to give me a bullish setup in the higher time frame, discount area, right? Like down here. So it's going to be bearish on the 15 minute, but I know that it's going to turn around at some point to be bullish again, to get in line with the 4 hour, right? And that should be in this area right here, right? And then I should look for a point of interest in that zone. Then it gives me a reaction and a confirmation that I can be bullish after that, right? And that's this right here. All right. What three time frames? This is a good question too. I use these three, like the one you've mentioned here, 15 minute, 4 hour, and daily. I also use the 1 hour sporadically in between. Sometimes when I use that, for a just kind of an intermediate confirmation, because sometimes, you'll see something on the 4 hour and you'll see something on the 15 minute, and maybe the 15 minute isn't as clear, but if I go to the 1 hour, right, or the 30 minute, as an example, sometimes I'll see a clearer point of interest, right? So it's not just limited to like three timeframes, although I would say keep the three to keep things simple so that's not too complicated. But you can certainly go to other timeframes to look for something that's, a little bit clearer if you don't see it on the time frame that you're usually looking on, right? And then that will give you a little bit more, sometimes it'll give you a better entry point or better point of interest to target or whatever that the case may be. But those are the three that I usually use, for my intraday charts. And you guys see me, every time I do these on these weeklies, and then for the guys that are in the VIPs, you guys see me do, these three timeframes for all the other pairs as well, right? And so those are the ones I focus on. And I try to do that to keep it simple for you guys as well, so that you guys don't get confused with, dealing with multi timeframes, because I think that that's, one of the issues is when you get too many time frames, you start to get confused as to like what you're trading, right? And it can get very confusing sometimes when you're looking at the 4 hour and then the 1 hour and then the 30 minute and the 15 minute and then remembering what you're supposed to be trading in the first place, coming down from the top down analysis, right? So try to keep it as simple as possible and use the three that you're comfortable using. It doesn't have to be those three exactly, but you need to have a higher time frame, some kind of intermediate time frame, and then a lower time frame for an entry time frame, right? And that's the three criteria that you should be looking at.
Hey, thanks, Jeff. One more question, sir.
Okay.
And so same scenario. We're looking at the alignment on the 3 time frames. That's like the perfect setup. So let's say the 15, the 4-hour, and the daily. I'm going to take my entry off the 15-minute. So when you say all 3 in alignment, would I potentially be looking for like a pullback into, let's say we're bullish. The higher
Yep.
time frame is bullish, 4-hour and daily.
Yep.
So would I be looking for like a pullback into the discount zone on the 15-minute?
Yep.
And then, okay.
Yep.
Okay.
Just like
All right,
it's
perfect.
just like this right here, actually, right? So the same idea right here. So we're bullish on the 4-hour, bullish on the daily, right? And this is the 15-minute. And so the 15-minute you're waiting for, and this is NASDAQ. So we'd be looking for this in the New York session in particular. So the New York session is going to give you some sort of liquidity sweep to the downside, and then it's going to give you a change of character and then a move up, right? Now you could catch it here. That's if you're very precise, you could catch it right here when it happens, right? And maybe on a lower time frame, you'd be looking for a setup there. But just taking this into account, let's just say you're not as precise and you don't catch this particular entry here. This is the confirmation for Friday to be bullish, right? Because we got the discount move, the reaction from the discount, and then we got the confirmation with the change of character here. So once that happens and this starts to pull back, you're looking at this range for the new day. And then you could be looking at this setup right here. This little move right here may not look like much, but it's for sure going to be a 3-to-1 when you refine it down. Let's see here. But you get what I mean, right?
Yes, sir.
All right. So yeah, there's the entry there. Stop loss is about 30 pips. I mean, for NASDAQ, that's pretty standard run-of-the-mill stuff, right? And then we can see here, I guess it's not quite because we had a ranging day. It's about 2.5 to 1, which is still pretty good. And then the expectation is going to be for this to continue higher, right, through the highs here. So this is, this could continue into the next day as a 3-to-1, 4-to-1, or beyond, right? But that's the idea: is when all time frames are in alignment, the 15-minute you're waiting for it to be bullish at the discount level after the pullback. And then you're going to get your confirmation with the sweep of liquidity and then the shift and the imbalance or the change in character, right? And then you look for the pullback for the bullish setup after that.
Thank you, Mr. Morpheus.
You are welcome, sir. All right. Okay, anyone else? All right, so that should do it. I mean, you guys have, if you guys think of any questions, I know that, obviously you'll probably think of stuff afterwards and you want to ask me. You can certainly reach me on Telegram via DM. I'll be happy to answer questions for you guys. You can also email me, or you can, just leave a comment. I'll always post these on the YouTube channel, and you guys can leave the comments below the video and ask questions there, and I always respond to those as well. So many ways that you guys can get in touch with me if you guys have questions. But I guess that'll do it for this one. So just as a public service announcement, we always take a break around this period. It's like a holiday break for us, from the Christmas period to the New Year's. So as I said in the beginning of the webinar, it's, this time of year, the trading volatility the volume gets lower, and the trades just aren't as, aren't as nice, right? It gets rangy, lots of consolidation, right? And the trading volume isn't there. So we always take a break around this period. And so we will be doing that from now until January, right? So about the second week of January, we'll come back and we'll resume our normal schedules. So you might not see as much activity. I will continue to post these Sunday market reviews for you guys, though, as long as I am available to do them. I will have them up, so you can look forward to those every week. But otherwise, we'll have a pretty quiet period here in the group. But if I don't hear from you guys, if I don't see you guys, obviously, have a very nice holiday. Merry Christmas to you guys. Happy New Year. I'll see you guys in 2024. And, hope to see you guys, really crushing it in 2024 and improving your game. And hopefully I can help you guys do that and be a part of that. All right.